All right. All right. Thank you, Danny. Thank you so much for inviting me again to present, and I'm happy to be here. Welcome to our presentation of credit reports and credit scores. Again, my name is Alessandra, and I am a housing counselor at Habitat for Humanity East Bay, Silicon Valley. This is kind of doesn't really apply to this audience. This is for the webinars that we normally present, but you do have access to the handouts through the link that Danny provided. So please take advantage of those handouts because they have a lot of great resources and information about today's topic. I would like to tell you just a little bit about who we are. Habitat for Humanity East Bay, Silicon Valley is a nonprofit, and we serve people in Alameda, Contra Costa, and Santa Clara counties. Our organization is a HUD-approved housing counseling agency, and we offer a range of programs and services that work to help people achieve financial fitness and learn how to manage their personal finances. And our services include one-on-one counseling, financial education workshops, and online financial education, which I'll talk more about later, which is available to you free 24/7, and first-time home buyer classes. Now, one-on-one counseling offers free individualized guidance by a HUD-certified housing counselor and is available to anybody who would like to learn how to manage their personal finances, including learning how to budget, how to balance income and expenses, maybe start a saving plan or manage debt. And we also offer credit counseling, which teaches how to build or rebuild a positive credit history, and pre-purchase counseling. And that's for people who would like to understand how the home buying process works and what they can do to financially prepare to at some point be able to purchase a home. And now we also offer affordable homeownership opportunities where we build new homes and renovate existing homes, and then we sell them at an affordable mortgage to qualified families, and home repair program. So to learn about all our services and how they work and what we offer and what each program offers, please visit us at habitateBSB.org. But today we're going to be talking about the credit report, what impacts your credit score. We'll also review how to dispute errors and clear collections, and some tips on how to build a positive credit history. Now, every time you apply to borrow money or you submit an application for a credit card or a loan, even rent, utilities, cell phone service, creditors and lenders access your credit report. And that's because they want to know, can you be trusted to pay them? Your report shows your present and past credit history, and the accounts listed are your credit references. They show how you handled debts in the past and how you're handling them now. Now, your creditor and lenders report your credit history to the credit bureaus, also known as credit reporting agencies. The bureaus collect the data, list the information on your credit report, and assign you a credit score. And the three main bureaus are Experian, Equifax, and TransUnion. Now, there are two types of credit pools, a hard pool and a soft pool. When your report is pooled for lending purposes, meaning you are applying to borrow money, maybe for a credit card or a loan, it counts as a hard pool and will impact your score. When the report is pooled for information purposes only, meaning you're not applying to borrow money, for example, maybe you're checking your own credit report to see what's being reported, or maybe you're applying for a job and it's being pulled as part of your background check, then it's considered a soft pool and does not impact your credit score. The credit bureaus can give access to your credit report only if there is a valid need. So lenders and creditors can pull it when you submit an application, but they may also review it, for example, if they anticipate an impending risk based on your recent payment history. So for example, maybe you always paid on time, but started paying late, or maybe missing payments. And if they see this as a red flag, then they may decide to check your credit report to see what else is being reported. And then if based on their review, they determine that you have become a credit risk, they may decide to increase your interest rate or maybe lower your credit limit. Landlords may use it as part of the decision process on whether to approve your rental application. It helps them assess the likelihood that you'll pay your rent based on your borrowing history. And in addition, they also will likely check your rental payment history records. Utility companies may check your credit history when you submit an application. And if you have a negative credit history, that may require a large deposit. Banks and credit unions may check it when you apply to open a checking account, in addition to checking information about accounts you've had in the past to see how you handle them. Employers, as I mentioned a little bit earlier, may pull your credit report as part of the background check for hiring purposes. And when you apply for insurance, maybe car insurance, the company will check it. And if you are considered a higher risk, then they may quote you a higher premium. And then, of course, you can access your own report. And we'll review a little later how you can pull it for free from each of the credit bureaus. Let's first go over some credit myths. So one myth that if you check your credit history reported by one bureau, you will see your full credit profile. So your creditors and lenders are not required to report your credit history to all three credit bureaus. They may choose to report it to one, to two, or none of the bureaus. So that means if your account is only reported to Equifax, for example, and you pull TransUnion, you will not see that account's history and you may miss important information. So for example, let's say you have an account that's gone into collection, but reported only to Equifax. So you check TransUnion and Experian, you don't see it, and you think all is okay, and you submit a rental application. But the landlord also pulls Equifax, sees the collection, and denies your application. So if you had pulled Equifax, you would have known that it was there, and it would have given you time to do something about clearing it before applying. Another myth is that when you pay off a debt, like a collection, the account is immediately removed from your report. Now, the account will stay on your credit report until the end of the reporting period, which can be 7 to 10 years, really depending on the type of debt. However, lenders and creditors will look at paid debt more favorably and will make it easier for your application to be approved. So it's always good to pay off your debts. Another myth is that credit scores are all the same. Now, credit bureaus may not receive all the same information about your credit accounts, like I mentioned earlier. Creditors and lenders, because creditors and lenders are not required to report your credit history to all three. So that means that the information may not be the same across the board, across the three bureaus. And that can create differences in your score. Also, there are several models out there for scoring your credit history. For example, FICO and Vantage Score are two scoring models. Both evaluate the same main factors, like payment history, that use their own formulas to weight each factor. And so for this reason, the scores will differ. Another myth is that closing credit cards will improve the credit score. It can actually end up hurting it, and we'll review how in a little bit. And another common myth is that co-signers are not responsible for the debt. Now, this is just not so, because co-signing on a loan means that the person you co-signed for was not able to qualify on their own. So the lender or creditor approved the application based on your credit history. Essentially, they are approving you. That means that you are 100% responsible for that debt. And if the person you co-signed for does not pay or pays late, then that late payment history will be reported on your credit report and your credit score will drop. The creditor could decide to sue you or sell the debt to collection, and that will have negative impacts on your credit score. And also because the account will be listed on your credit report as a debt you owe, it may impact your ability to qualify for loans or credit. Now, the credit report includes your personal information, like your name, social security number, your date of birth, and also current and past employment history, address information. It also includes credit inquiries. That's when you apply to borrow money or enter in a payment agreement, and they pull your credit report in order to consider whether to approve your application. It includes information about all your accounts, both open and closed, how you handle them now, how you handle them in the past. It includes public records like bankruptcies, judgments, and liens. It includes derogatory accounts. These are the debts you owe because you did not pay them as agreed. Things like collections, profit and loss, charge-off accounts, even car repossessions. And it also includes contact information for your creditors, lenders, and for each of the credit bureaus, should you need to get in touch with them. Now, checking your credit report regularly is important because it will help you be more aware of what lenders, creditors, and lenders may see when you submit an application, and give you time to address any issues that may result in a denial. It also helps you detect inaccurate or incomplete information that you should ask the bureaus to correct, and also signs of possible ID theft so that you can take immediate action to minimize the damage. Ultimately, it helps you make sure that your credit history is in good shape when you're ready to apply for a credit card, a loan, rent, or a job. So let's review a sample credit report. Now keep in mind that not all credit reports look the same, but they all will include the same sections. So section A here lists this person's personal information. Whenever you apply, submit an application, you provide information about yourself, including names you used to apply for credit, address, and place of employment. And so this information becomes your historical information and is reported to the credit bureaus, and it's going to be part of it, of your credit history. Including places you've lived at, and again, different names you might have used when you apply for credit or loans. Now, one thing to keep in mind is that this information may or may not be up to date, but it is important to check it to make sure there isn't any information listed that does not belong to you, because that may be a red flag that somebody has tried to apply for credit under your name. And on this credit report, section B shows that this person placed a fraud alert. That means that if anybody applies for credit or a loan, then the creditor must contact them via contact method of their choice, like a cell phone number, to verify that they are the ones applying for credit. Section C includes a consumer statement. In this case, this person used it to explain why they missed a car payment. Now, you do have the right to include a 100 words personal statement to your credit report. It allows you either to explain the circumstances that contributed to a financial situation that led maybe to a delinquency, or dispute something on the report. It does not affect your score. But one thing to note is if you choose to place a statement like that, find out when it will automatically drop off or how to remove it, because you probably don't want to alert lenders to credit issues that you had in the past that you have since resolved. Section D is in this report is the creditor information. These are all your accounts, including their open date, your credit limit, monthly payment, balance, type of account. For example, is it a credit card account or a loan? And it will also include information about your payment history on that account and the date of last activity. Now, in this credit report, the auto finance company account has a past due history. This is considered a red flag for a creditor or lender and might impact the score negatively. And this is why this person included the statement in section C. They wanted to explain that they didn't miss the payment out of negligence. It was due to a medical event that temporarily impacted their ability to keep up with the payments. Section E is the public record section. This report shows a lien that was filed in 2003 by Fulton County, released in 2007. So this was likely a tax lien and means that the amount owed was paid because it says released. Now, tax liens and civil judgments are no longer reported on credit reports. So that means they no longer impact a credit score. However, it does not mean that you no longer owe the money, nor does it mean that whoever you owe the money to cannot pursue legal action. And nor does it mean that the records are not accessible by creditors and lenders. There is also a bankruptcy listed, which was discharged. That means this person is no longer legally required to pay the debts that were included in the bankruptcy filing. Section F lists a collection account. This collection is marked as unpaid and has an outstanding owed balance. One thing to keep in mind that sometimes credit reports will show profit and loss accounts that are marked as profit and loss or charge-off accounts. A lot of people think, oh, that means that they wrote it off their books as a loss, so I don't know this debt, but you do. And even though they wrote it off as a loss. And in addition, these profit and loss and charge-off accounts can turn into collections because your original creditor could choose to sell, recoup some of the loss by selling the debt to a collection agency. Now, evictions don't appear on a credit report, but items related to it can. So if the lender sends it to collection, then it will show up on the credit report as a collection account. And then Section Z lists a credit inquiries. That's when you apply to borrow money for either a credit card or a loan, or anytime your credit report is full because you're trying to borrow money. One thing to note is that those pre-screened offers that you receive in the mail will show up as inquiries on your credit report, but they do not impact your credit score. Because you didn't you didn't apply for that credit card. But if you decide to apply for that credit card, then they will pull your credit report, and that will then be considered a hard inquiry and will impact your score. Accounts usually need to have a minimum of 3 months and perhaps as much as 6 months of activity before they can be used to calculate a credit score. So if you don't currently have one, once you have an account that's reported for at least 3 to 6 months, you'll be assigned a score. Now, a credit score predicts how likely you are to pay back your debts, and it is a snapshot of what is currently listed on your credit report. And it changes all the time, even by the hour, because new information is constantly reported by creditors about you and your accounts. Now, a scoring model uses the information reported to create a credit score. The scores on the slide are based on the FICO scoring model because this is the one that's most widely used. However, creditors and lenders may use other methods or models when they evaluate an application. So if you want to check if your score meets their requirement, then you want to make sure you understand which model they're using so that you are comparing apples to apples. Generally speaking, a score that is in the 700 is considered good. Of course, the higher, the greater your chance your application will be approved and the better interest rates will be quoted. There are several models out there. Again, just to remind you, FICO is one of them, Vantage is another. Those are the two main ones that are coming up to mind. But again, they all use different scoring models, but they all use the same factors that they consider in calculating it. So let's look at those factors. Now, we don't know what the formulas are, but the bureaus do tell us what it is that we do that can have a positive or negative impact on our score. Now, the good news is most negative information won't impact it forever, and their effects on the credit score may lessen over time. But knowing what can negatively impact it or positively impact it can help us understand what we can do to either reverse the effect of a low score or even improve it. So how you handle debts has a 35% impact. Having late payments or outstanding debts like collections reported will have the largest negative impact on your score. How much debt you owe on credit cards has a 30% impact on your score. This is also referred to as the credit utilization ratio. Borrowers who max out credit cards are viewed as risky because it's a red flag that they cannot handle debt responsibly. This is really where people get into trouble the most often. Credit card companies require us to make a minimum payment that's very low. And that minimum payment is based on the balance that we carry, but it's very low. And it's so low that it tricks us into feeling comfortable to keep charging because we know we can afford that amount. Now, a good rule of thumb is to keep your credit card balances at no more than 30% of your credit limit. That means that if you have a credit limit of $1,000, you should not carry a balance higher than $300. And of course, the lower the better. Now, the good news is that your credit score can improve quickly as you pay down your balances. Next impact is the length of credit history, which has 15% impact on the score. A short history does not mean you can't have a good score, but the longer it is, the more information is available about you, how you handle debts, which can help increase it. If you want to know how old your history is, you will look at your credit report and find the account that has the oldest opening date, and that's when it starts. New credit has a 10% impact. That's when you apply for new credit, for a new credit card or loan. And every time you do that, again, your report is pulled, your score gets a hard hit. So really, each credit inquiry, how much is going to impact your score really depends on how many accounts you've recently opened or applied for. Definitely having too many is considered a risky behavior because you have the potential to take on new debt without having demonstrated how well you would be able to pay it off. And then types of credit used has a 10% impact. The score looks at what type of accounts you have, like, for example, do you have credit cards and loans or just a loan or maybe just a credit card? You don't have to have different types, but having what is called a credit mix can help your score because it shows how you handle different types of debts. Now, although different factors are considered in the score calculation, paying on time and keeping your credit card balances low are two easy ways to help it. So let's talk a little bit more about that credit utilization ratio. Let's go over an example. Just to kind of emphasize, the credit utilization ratio is calculated by dividing the balance you owe on a credit card by the credit limit that you have on that card. So the score will look at two types of credit utilization ratios, per card and overall. So per card utilization looks at each individual account. It measures how much of each card's credit limit you're using, essentially. Overall utilization looks at all your accounts combined. So it's going to look at how much of your total available credit limit you're using. So let's look at an example of how this works. This person has 3 credit card accounts. Credit card 1 was opened in 2010, credit card 2 in 2013, and credit card 3 in 2017. All 3 accounts have $3,000 credit limit and a balance of $900, which is 30% of the credit limit and within a safe range. The total available credit limit for all 3 cards is $9,000, and the total in-owed balances is $2,700, which is 30% of the total credit limit, again, within safe range. Now, credit card number 3 sends this person a balance offer, a balance transfer offer. If they transfer all their credit card balances to their card, they offer a 0% interest rate for 12 months. So it sounds like a great offer because the interest rates on all 3 cards is very high. So they decide to transfer the balance from card 1 to card 3 And as a result, the balance on card 3 increases to $1,800, which is 60% of the credit limit for that card. They also decide to close card 1 because they don't want to have so many open accounts. Now, because they think they're doing the right thing, they do the same on card 2. They transfer the balance to card 3, close the account, and now card 3's balance is $2,700, which means they're using 90% of the available credit limit on that account. Also, because they closed card 1 and card 2, those credit limits are no longer available to them. So their overall available credit limit went from 9,000 to 3,000. So that means that their overall utilization ratio is also at 90%. So the score will drop at every step. Now, closed accounts eventually drop off the credit report. So when card 1 and card 2 are no longer reported, their oldest account will be the one opened in 2017, which means the length of their credit history will shorten by 7 years and the score will drop again. So the general rule of thumb, pay off your balances and keep the accounts open. To preserve the length of credit history, identify the accounts with the oldest open dates, and then keep those cards active by using them from time to time, maybe every 2 to 3 months, charging small amounts that you pay off in full when they're due. And then if you have too many cards and you want to close some, instead of closing them, shred them. The creditor, the ones that have not the oldest open dates, but the ones that have the newer open dates, shred those. And then the creditor will eventually close the accounts if there's no activity, but the impact won't be as drastic as if you were to close a number of cards all at once. All right, we have a quick knowledge check, and Danny, I think they can answer on the chat, right?
Yes, they
Yes.
can. I've already initiated, so everybody can send in your questions to Sandra right now, and she'll be able to answer it live, or you can post it in the Q&A option in the Zoom. But we'll be able to see what you're sending us right now.
Yeah, so while you're thinking of questions, let me ask you a question to see, just to review some of the things we talked about. So, what has the largest positive impact on your credit score? So remember, we looked at that pie chart, and there were different things that impact a score, but what has the largest impact on the score? And that's okay if you don't remember. We will, the point of this knowledge check is just to kind of make sure that we are covering the information well. And before we move on with more information, that it's, we're helping kind of cement it. And
I
we
see a
can.
hand by Andrea. Yeah, Andrea, were you able to? Uh, okay. Well, I see you. We see you texting. So go ahead and put your question in the chat.
Oh, my question?
Oh no, Andrea in
Oh, Andrea.
one
Oh,
of
I'm
the
sorry.
yeah. All right. All right.
Okay.
Well, while Andrea's putting in their question, I see that Prina has one. If I have moved to the US recently, like 2 months ago,
Mhm.
how will my credit history be assessed? Is it possible to pull my credit history from any other country? That's a good question.
Yeah, no, they probably won't accept credit history from another country. One thing you can do if you don't have a traditional credit history yet, meaning you don't have like a credit score, and you're just starting to build one, you can provide alternative credit references. So these are references from anybody that you're contractually obligated to making monthly payments to. So it could be your landlord, it could be your cell phone provider, insurance company, if you're paying your car insurance, for example, monthly. So really anybody that where you're under contract that you have to make monthly payments to can serve as an alternative credit reference. So you can ask if you can provide those while you build up your traditional credit history.
All right,
Um,
Alessandra, do you see the next question? This is a good
I
one.
do. I'm declaring I have several credit cards while having automatic charges and auto pay set up on those charges. Help bill. Yeah, so I can't really quite comment on your personal situation because I can't give any advice on that. But you know, it's even after a bankruptcy, you can rebuild your credit history. It's going to take time. So obviously, you once the bankruptcy, remember that credit report we reviewed had a bankruptcy that had been discharged. Once that's discharged, creditors will and lenders will look at it as part of the history. Typically, they want to see a bankruptcy discharged at least 3 years have passed since the discharge before they no longer consider it, and it depends on the lender and creditor too what that period is. But just very carefully start kind of rebuilding your credit history. Yeah, it's going to take some time, but you can do it. And in the meantime, again, you can maybe see if you can use alternative credit references to kind of help show that you're doing all you can to show that you are staying on top of your debts. All right. So does anybody remember what the largest positive impact on your credit score is? Any thoughts? All right. So remember the biggest chunk was your credit history. Thank you. Yes, pay on time. So that's part of your credit history. So credit history is you pay on time, you pay your debts as agreed. That has the largest impact. And then not sure exhaustion of credit limit. I think you mean how much of your credit limit you're using. That's the next impact. That's if you're using too much, if you're borrowing too much, then that's and your balances are too high, then that's then the next thing that can have a strong impact. All right. So let's move on, and then we'll do some more kind of a few more knowledge checks questions at the end of the presentation, and we'll do some more Q&A. All right. So typically, you are entitled by law to pull a free copy of your credit report from each of the credit reporting agencies every 12 months. You do have to request each bureau's report separately. You can pull all 3 reports at the same time, but if you space out your request, you can get a copy of it throughout the year. So for example, in January, you pull Equifax, and then in May, you pull TransUnion, then in September, you pull Experian, and then in January, you start again with Equifax. So all year long, you're kind of monitoring your credit history. One thing to keep in mind is that right now, through December 31st of this year, Equifax, Experian, and TransUnion are allowing consumers to check their credit reports once a week for free. And this is a pandemic-related program that they it's tied to the pandemic, but they've extended it until the end of this year. It's going to go away. So once it goes away, then you can only pull it once every 12 months. So, if you have a credit history right now, it's and you're trying to, you want to do some things to try and improve your score, although not going to get your credit score, but if you want to fix some things, this is a great time to kind of monitor your credit report on a weekly basis. Now, to request your free reports, you request them from annualcreditreport.com. You can do it online or by calling. Now, this is the official site where you can get the free copies. Be aware of sites that look very similar and ask for payment, because it shouldn't cost you anything if you order it from the official site. Now, you can also get, that's the tip 4. You can pull one report in January, one in May, one in September, and then start again in January. This is for when you can pull it every 12 months. Now, you can also get additional free reports if you were denied for credit for service, an apartment, or employment. If you're out of work and plan to look for a job within 60 days, if you're on public assistance, if your report is inaccurate because of identity theft, or if you have a fraud alert in your credit file. So take advantage of the service from your credit report. You get very valuable information. As I mentioned earlier, you can check, is there anything that's negatively impacting your score? The errors reported? Are there any red flags of possible ID theft? So do take advantage of this service. Now, just checking your credit score will not help you understand what is impacting it. Really, the only way to know is by looking at what's reported on your credit report. But sometimes if you may be applying for a loan where the lender has a minimum score requirement. So you may be useful for you to check it. Now, when you pull your free reports from annualcreditreport.com, you will not get your credit score, but you can get it by requesting it from various companies, including FICO and the credit bureaus, although you'll likely have to pay a fee. Now, watch out for free credit score or free credit report offers, because they often convert to ones you must pay for after the trial period ends. And it could also be a scam trying to get you to share personal information. So here's a video from the Federal Trade Commission that tells more about this.
One day, Laura called the number for annualcreditreport.com. She wanted to check her credit, and she knew their credit reports were really free. 2 weeks later, Laura got her free report in the mail. That same day, her husband Tony saw an ad for a free credit score. He went online to get his free score. He thought it was cool to know his number. He figured it would tell him whether he had good or bad credit. But Laura was happy to know that the information in her report was right, and that it said she paid her bills on time. Tony still thought he got the better deal. Sure, Laura could see her credit information, but he knew his score, and it was free. But a month later, Tony changed his mind. His credit card bill had a strange charge for a credit monitoring service. It turns out his free score signed him up to pay $29.99 a month for credit monitoring. He got his credit card to cancel the charge, but Tony didn't think he got the better deal anymore.
And I apologize. I see that the closed captioning captures what I say pretty well, but obviously not the video. I was like, I don't know what it was translating. All right, so the credit bureaus do their best to maintain accurate information, but the reality is that errors can occur. Most errors have to do with wrong data that's reported to them by creditors, banks, lenders. And if the information's wrong, they have no way of knowing that unless you tell them. Also, bureaus can make mistakes. For example, they could accidentally mix the credit files of two consumers who have similar names. And then other errors are a result of ID theft. Now, the dispute process allows you to correct these errors. So if you find wrong information listed on in your credit file, then you need to dispute it with the credit bureau or bureaus that are reporting it. Disputes can be submitted by letter or online on the Bureau's website. When you submit your dispute, you first want to identify the error before you even write it. Identify all the errors or errors that you want to dispute and the bureaus that are reporting it, and then write your dispute letter or submit your online dispute, and include any documentation that helps prove it, like proof of payment for a collection, for example. You also need to provide information to prove that you are who you say you are, like your name and address, and you may also need to provide information like your social security or driver's license number. To know what each bureau requires, check their websites and keep copies of everything. And if you're mailing your dispute, send it certified mail so that you have proof of delivery. Now, once the credit bureau receives your dispute, it has 30 days to investigate. They contact the information provider, like the bank, lender, or collection agency, to let them know that a dispute's been filed and the specifics of the dispute. The bureau will also forward the supporting documentation you provided. The information provider has to then investigate and report the results back to the credit bureau. And although the bureau has 30 days to investigate, it may take up to 45 days until you receive the results of the investigation. Then once that process is complete, the bureau must give you the results in writing, and if a dispute results in a change, a free copy of your credit report. As a result of your dispute, there can be 3 possible resolutions. The incorrect information will be corrected. The information that cannot be verified will be updated or deleted. The information verified as accurate will remain intact on your credit report. If you don't agree with the results of your dispute, there are some additional steps you can take. You can contact the creditor that reported the information to the credit reporting company and dispute it directly with them. You can provide additional information or documents to the bureaus relating to your dispute. You may request a brief statement to be added to your report. Remember that statement that was on that credit report we reviewed earlier. And you can also submit a complaint to the Consumer Financial Protection Bureau. Now, keep in mind the bureaus consider your request to be, if they consider your request to be frivolous or irrelevant, they will stop investigating. So, for example, maybe you need to give them additional evidence to support your request. And in that case, they need to notify you of that and give you the reason. And be careful about credit repair scams. Don't go to companies that claim they do credit repair but want some money up front. There isn't anything that they can do that you can't do yourself for free if you just follow the dispute process. Now, creditors may contract with the debt collector to help collect past due money that you owe. They could also choose to sell the debt to a collection agency and then try to collect the money from you. Now, if you find a collection listed on your report, you'll need to work with the collection agency, not the original creditor. But before you do anything, first verify the debt. You want to make sure you owe it. And even if you are sure you owe it, it is still advisable to verify it because sometimes debts are sold and you want to make sure that you're paying the right collector. So get more information, including the agency's authority to collect the debt and details about the debt. And then you can send a debt verification letter. You can request this information by sending them a debt verification letter, asking them to provide you with their name, address, and phone number, details about the debt, including who the original creditor was, their name, address, and the original debt amount, the total that you now owe, when the account became delinquent, when the collector obtained the debt. And then once you have more information, then do your own detective work, check with the original creditor to confirm that the debt is yours. Ask them if they sold the debt or hired a company to collect it. And if so, get the collection agency's name and their contact information so you can confirm if the debt collector who contacted you is authorized to collect it. If you verify the debt is yours before you contact the collection agency to discuss a repayment, make sure you have the funds to pay. Because if you don't, you risk restarting the statute of limitation period. Now, that's the period during which the collector can sue you. So if you don't have enough available, one thing you can do is to review your expenses to see how many you can cut or reduce for a while so you can free up money that can go towards paying off that collection. Once you know you have the funds available, contact the collection agency to work out a repayment. Confirm with them the total you owe because interest may have been added. You can try to negotiate a lower payment that fits with your budget. However, they may not be willing to negotiate. So you need to be ready to pay the full amount that's owed. Then if you and the collection agency agree on a lower payment amount, keep in mind that these settlement offers expire, so don't wait to pay it because if you do, they may no longer honor the agreement. And ask for written confirmation on both the total you owe and what you and the collection agency agreed you will pay to clear the debt. This will help avoid possible problems in the future should the agency claim you still owe a balance, and especially if you negotiated a lower repayment amount. Without this written confirmation, really it will be your word against theirs if there's a problem. So make sure you get that. And then after you receive the written confirmation, send your payment. Don't pay with money orders or cashier's checks because you won't have proof they cashed it. So pay with a traceable method like a check. And if you mail it, send it with delivery confirmation so you have proof they received it. Request also a payment receipt acknowledging that the account's been cleared and that you have a zero balance owed. And make sure you keep records, paper trails, notes about phone conversations, and keep them handy in case you need to prove in the future that you pay the debt as agreed and that you have a zero balance owed. Now, if you get a collection letter and believe the debt is not yours or is not legitimate, mail a dispute letter right away, because if you wait, the agency can assume the debt is valid and continue all legal collection efforts against you. If you're sued by a debt collector, be sure to respond to court documents, or the court will assume you agree with what the creditor says and issue a judgment against you. In this case, you may want an attorney to advise you at the hearing, and there are legal aid services that provide no or low cost services. You can search for these legal services on the American Bar Association website, lawhelpca.org. And also Bay Area Legal Aid provide information about available pro bono legal aid resources. And also another resource are universities' law departments. They often offer free help. The Financial Protection Bureau has sample letters on their website that you can use if you're experiencing common problems that may come up with debt collectors, including debt validation and debt dispute letters. Now, the reporting period for negative information starts from the date of missed payment or when the delinquency first occurred. So keep in mind that itself never expires. So even if it falls off your credit report, but it's never paid and never goes away. So that means even if it's no longer reported, they can still try to collect from you. Now, the biggest impact on your credit score is when the negative information is first reported, and as time passes, the impact diminishes, provided that you demonstrate you're using credit responsibly. So bankruptcies are reported for up to 10 years. There are two types. Chapter 7 will stay on your credit report for 10 years. That's when you walk away from debt and don't pay anything. And Chapter 13 will stay for 7 years. That's when you enter into a repayment arrangement with the courts and pay off the debt. Late payments, foreclosures, collection accounts, and public records are reported for 7 years. This includes charge-off and profit and loss accounts. Hard inquiries, that's when your credit report is pulled because you're applying to borrow money. Those are reported for 2 years. Tax liens and student loans are federal debts and can remain indefinitely on the credit report if they are unpaid. Active paid as agreed accounts stay on your credit report as long as the account stays open and the creditor reports it. And a closed account in good standing typically falls off your report after 10 years. Now, if you have a poor history or a short history or no history, you are perceived as being a higher risk. Really just how long to build or repair credit history depends on circumstances and may take time. Being patient and forming good habits will eventually pay off. So if you don't, first step, if you don't currently have a relationship with the bank or credit union, start building one. Show you're a good customer, that you use checking and savings accounts responsibly. Now, people who have a flawed banking history and have been turned down for a checking account because of past banking issues can look into second chance checking accounts. And some banks and credit unions offer these types of accounts to help people rebuild their banking history. Once you have an established relationship with the bank or credit union, they may be willing to approve you for a secured credit card. These are backed by a specific amount that's held in your savings account, and that amount becomes your credit limit. And it serves as security for the bank. Now, if you use the card responsibly, after a while, the bank may be willing to unsecure the card, and then the money in the savings becomes again available to you. Now, how long this takes really varies from bank to bank, so make sure that you ask, and also make sure you ask to make sure that it's going to be reported to all 3 bureaus. You can also look into a credit builder loan. These are sometimes called fresh start loans. They work like this. The amount you borrow is held in a bank account while you make monthly payments, and then you can access the money after you've made enough payments to fully repay the loan. Again, ask the bank how the account will be reported. Will it be reported to all 3 bureaus? Will they report it monthly? You can also ask somebody you know well to add you to their account as an authorized user or be a co-signer. Make sure you ask somebody who has good credit habits and that you do your part to use the account responsibly to avoid the risk of hurting each other's scores and credit history. As an authorized user, you have the right to use the credit card, but you're not legally responsible for paying the debt. So it won't have a huge impact on your score and does not count as a credit reference. But these types of accounts can help increase a credit score, provided the account holder manages the account well. And the other benefit is that the authorized user gains access to the primary cardholder's credit line without having to go through a credit check and may receive their own credit card. You can also ask somebody to serve as a co-signer. That means you're both responsible for the debt, and if one of you does not pay the bill, the other person on the account will have to. Now, you can't report rent payments on your credit report yourself, but you can use rent reporting services. Ask your landlord if they offer this service. You may have to pay a fee, so make sure you ask how it works. And also make sure you understand how the payments will be reported. Again, will they be reported to all 3 bureaus? Will they be reported monthly? Now, this rent payment history will not be factored into the credit score calculation, so will not help it. But having that information on your credit report can make it easier to provide alternative credit references. Experian, one of the credit bureaus, also offers a free service called Experian Boost, which tracks your utility and cell phone payments. So to sign up, you must have at least one active credit account, like a credit card or personal or a loan. You link the bank account to use to make your utility payments, and then Experian uses your bank records to find on-time qualifying payments, and then adds those records to your credit report. So this is good for people with little to no credit history, as well as established borrowers looking to increase their credit score. And make sure you pay all your bills on time. Monthly payments you make on other obligations like rent, cell phone, utilities, those are not reported on your credit report, but they can serve as credit references. And store credit cards. These are easier to qualify for and can be an option when starting to rebuild credit. However, they carry very high interest rates and typically have very limited use because you can only buy things that the store sells. It may lead you to buy things you don't need. So if you're having a hard time being approved for a regular credit card, opening a store card is an option. Just be careful about applying for too many. All right, let's review some credit tips. Keep credit card balances low, limit charges to 30% of or less of a credit limit. And good practice is track your card balances as you're charging, and to make sure you're not going over that 30% threshold. Pay off debt rather than moving it around. Instead of moving it around, like doing balance transfers, stop adding to balances and start a debt repayment plan. Don't close unused credit cards. Instead, stop using them and let them close on their own. Don't open credit cards you don't need because too many credit inquiries have negative impact on your score. If you have been paying late or missing payments, start paying on time and get back on track. Set up payment reminders. Better set up automatic payments so it'll be paid even if you're not able to. And watch out for credit repair scams. Here's some warning signs of repair scams. They ask you to pay before providing services. They tell you they can guarantee a specific increase in your score or get rid of negative credit information in your report, even though the information is accurate and current. They don't tell you your rights and what you can do yourself for free. And they tell you not to contact the credit reporting bureaus directly. Whoop, sorry. Now, if you need help with increasing your score, repairing or building, or rebuilding your credit history, reach out to a HUD-approved housing counseling agency. As I mentioned earlier, Habitat is a HUD-approved housing counseling agency, and our HUD-certified counselors can help you. We will review your credit report with you. We'll show you what you can do and help guide you through the process. All right, we'll take more questions. I do want to tell you about our Financial Education Center. This is a online resource that's available to you 24/7. And I believe Danny has the link to the online Financial Education Center. Otherwise, I can put that in the chat box as well. But this is available to you. It's got lots of short lessons. They're interactive. They provide real case scenarios and calculators, videos on all kinds of personal finance topics, including budgeting, retirement planning, banking basics, even credit reports and credit scores. So I encourage you to visit our Financial Education Center because it's available to you for free anytime. It's also available in Spanish. And you don't have to create an account. If you want the system to remember your progress, you do have to create an account, which is a really quick account setup. You just answer a few very short questions. Otherwise, you can use it as a guest user. And I will happy to answer questions. And I see that Danny put a link to our evaluation form. This is an anonymous form, and it's your chance to let us know what you thought of the webinar. So we greatly appreciate the feedback. If you could please take the time to fill it out. It's a really quick process.
All right, Alessandra. Mark actually had some quick questions.
Yeah.
One of them is, once again, what are the best ways to check your credit score if there's available options already embedded? I know I sometimes, for myself, see that my bank does it often, sometimes, or credit card companies that I currently use when I pay on their apps. But maybe the best ways to check your credit score. And the second question Mark had was, how many credit cards is too many? Which might be a good answer.
Yeah. Okay. So for the credit score, we talked a few slides ago. We were showing we talked about FICO. So FICO, on the FICO website, you can purchase the FICO score. That's the one that's most commonly used when you're applying for credit or loans. The credit bureaus offer their own credit scores. That's a different scoring model. It's called the Advantage scoring model. So you can purchase it from the credit bureaus. As you mentioned, Danny, credit cards offer the service. Banks, maybe, I don't know. There's all kinds of offers out there. One thing I would say is, knowing your score is really fun, but it literally changes by the hour because information is constantly being updated. So if it depends on why you're checking the score. If you're checking it because you're applying for let's say a loan, and you know that they have a minimum credit score requirement, you want to know what your score is, then again, make sure you know what scoring model they're using, because if you're buying the score from the credit bureau and they're using one scoring model, but the lender is following the FICO model, you're not going to be comparing apples to apples. So you won't know whether the score is going to meet that requirement. But if you want to know your score just to know how you're doing, really that's not the best way. The best way to know how your credit history is looking is to pull your credit report, because that's where you're going to see all the information reported and where you can identify anything that you may be needing to fix or adjust or do something about. And again, now you can pull it for free once a week. So I'm not discouraging you from pulling the score, but because you have to pay for it, just keep this in mind. And then how many credit cards is too many? Oh my God. I get that question a lot. There really isn't a magic number. It's, I would say, more than 2 or 3 cards is really, you don't need more than that. A couple of cards is good. All you need is one to start a credit history. So really, you don't need more than that. So I would say know yourself. And if you think you are good at managing and making sure you're not like you're able to kind of keep it under control, then a couple of cards is good. Maybe 3. But if you're just starting out or if you've had problems in the past, I wouldn't go past 1 for a while. Get really used to using that one and staying on top of it before you think about opening a second one. Let's see, there's, I don't know, are there any other questions or, and I would like to also share the Financial Education Center website.
Yeah, I wasn't able to add that link, so it'll be great to share.
Yes, no, thank you. I will do that. Let me make sure I'm using the right link because, okay.
While Alessandra's doing that, please, if you have any more questions, this is the best time to ask before we do end our session. But Alessandra, that was amazing. Thank you for that. I think often enough the thought of credit can be very daunting and kind of worrisome to many people, for the fact of scared of using it. But I think that what you help break down is it's about responsibility, just making sure we use it in the proper means.
Yeah, it's just knowledge, right? Once you know how it works, then it's pretty straightforward, I would say. It's just knowing how that score and that and credit reports are how to read them and how to, what it is that you do that can help that score and the credit history.
Awesome.
Yeah.
I know some people emailed me already wanting this video and slides, so don't worry, I will get that to you. I'm glad you find it so informative and important to your daily education. Thank you, Mark. Thank you, everybody, for actually joining us. And thank you, Alessandra, once again, for being here and providing very important information for daily use. Yeah.
Thank you, Danny, for inviting me again. I'd love to present for the Santa Clara Library, and thank you everybody for attending.
As well, if you haven't contacted me, I've already entered my email, as well as fill out the evaluation form. That helps Sandra as well as Habitat for Humanity East Bay, Silicon Valley know how these sessions are going and how they're helping you, or any tips that you've thought you need to add. Just please click it on it and take some few moments to answer. Other than that, I think we'll probably end it for this time. We have another session in a few months, but I hope everybody's well. Alessandra, thank you again, and we'll catch you on the next one.
All right. Thank you. Goodbye, everybody.
Take care, everybody.
Bye. Bye.